Hello everyone, it's me the Boss Hog, and we're back for another portfolio update. A pretty interesting couple of weeks. Portfolio is up 5k, profit is down 4k. How have we managed that? It's an interesting story, but actually with a pretty simple explanation. Let's do it. Alright, so standard stuff here. We're going to look at changes since last update, and honestly there's quite a few. So I'm going to start with the really good news, which is that I have started to deposit actually very serious sums of money again, to be honest. This was partly helped by the fact I had a couple of pretty good, very good actually, poker sessions. I was probably going to be depositing toward the end of September anyway, but I started depositing sort of in the middle of it from the 18th there, as you can see. And then this final deposit here was sort of when my wife got paid, and actually it's a fairly specific amount, but it meant that I could finish off my personal ISA, so that felt really good to do this. All of these amounts actually went into my personal ISA. Just to me, it was very easy what I have been buying. And then for the second half of the tax year, we're going to be focusing on my wife's ISA. So honestly, I mean, you can see these figures here, but it's basically 9,500 deposited, which is, as alluded to the screenshot, and you'll see very shortly that despite adding that money, my portfolio value only went up like sort of 5 grand. Because, like many people, I suspect I had a fairly challenging September, especially because I have a very tech-heavy portfolio. So, but it is what it is. I'm still happy with the deposit, fairly obviously, and I'm hoping now to actually get into a relatively regular routine and kind of deposit. October does have some financial challenges for us because it's when a lot of our quarterly bills start to arrive. But still, I expect to get a lot more regular in my deposits basically moving forward for the rest of the year. So that should be awesome. Also, September's a really good month for me dividend-wise, but it's fairly heavy toward the end of the month. And also, unfortunately, previously September's been the month that a UK insurer called Phoenix has been paying me dividends, but that actually slipped into October this year and will be October moving forward. Otherwise, September would have been my best month ever. Still, more than £300 dividend made across the month, and you can see here a pretty solid finish to the month as well, 166 give or take. A lot of these just went straight back into where I was getting from. In fact, from memory, I think they all went straight back into where I was getting them from. So Amcor's pretty beaten up at the moment, but again, I still like what I'm seeing from the company. I'm hoping that the EPS is going to recover. One of the founding family members of the business sold a fairly chunky stake at $24, and that was at the same time that the whole sector got beaten up as well. So I'm now actually very happy buying at these levels. I do remain green on Amcor, but it's by about 15%. I had been up as high as sort of 50% before all of this happened, so an interesting kind of journey. Legal in general, very happy buying at these levels, down about 10%, but I'm very confident in the business, and we were more than happy to buy at these kind of levels, so that's awesome. Then I've got my Dutch ETF here, pays quarterly, so just straight back into it. I would actually say that the ETF's slightly beaten up at the moment. It's a really narrow. It only has 25 holdings, and several of them are a little bit beaten up, notably Adyen, payment provider. But I'm happy to buy at these levels. I'm down about 2%, and again, whenever this is red, the Netherlands is sort of one of my more optimistic hopes for European countries, so I'm specifically targeting them. And happy to have the exposure through the ETF. T Rowe price, I suspect, is known to many people. I'm down about 10% on this, but that's fine, and I sort of expect it to be challenging until the wider markets and economy recovers. And the Huntsman, I mean, I'm down quite materially on Huntsman at the moment, down about 20%, but overall I've made many thousands on Huntsman from a couple of previous buys and sells I was in on it, so still pretty green overall from that perspective. Huntsman's been on a continuing evolution, shall we say, as a business for many years, including the last couple is no different as it sold its smallest of 4 divisions. But still, I still am happy to buy the company at these kind of levels, and pretty solid dividend, all things considered. They're near enough 40 quid, so I just put it back into there. In terms of sales, I did do some sales, as you can see. You can kind of ignore the one on Scottish Mortgage because that was where my broker was having a little bit of a confusion, I guess, and bought too many and then auto sold for me. So this is sort of a result of that. Otherwise, I wouldn't have sold SMT. And then these two were deliberate sells, and I've just kept one share in the World Healthcare ETF or fund. And I only sold these for very modest greens, and I'm talking like 1%. pretty a small profit, should we say. But as we'll touch on in a second, I just saw better buying opportunities effectively, sort of a bit of a disconnect on a couple of funds between their NAV and the share price, which is one of my favourite times to buy funds. And so I decided to sell this I do plan on getting back into it. I think there's nothing wrong with having exposure to mature healthcare, which is what this ETF covers. But that was my rationale here, was to free up actually a fair chunk of money, sort of about 2.7k, to buy into other things. So, in terms of my buys, a lot of this is SMT. You can kind of see them here, here, and two more down here when my broker was having a bit of a fit with my large stakes. But almost all of the new capital basically went into SMT. To me, it looks like an absolutely screaming buy at the moment. 25% discount on the NAV. I know there's some questions about their private holdings. I've spoken about this before and I have no worries about it at all. And when I do get around to doing it, I will do a proper deep dive into SMT because they're now sort of 20% of my portfolio, as we'll detail in just a second. So very serious money thrown at SMT here. Got a reasonable price. I think this one especially is fantastic. Buying at 665, it feels really good. Other one's not quite as good, 698, and where's the other one? 672. So a bit of a blended one, but you know I was putting more money into it as it went down. So my average price is sort of 670 or so. Just eyeballing it. So yeah, that's where almost all of my capital went, and it's now quite comfortably my largest position. I mentioned about my Dutch buys already. That's where some of the money from the healthcare sale went, but most of it actually went into Alliance Technology Trust. So you can see here, I've been really backing sort of growth and tech in this regard. And yeah, for me, it's weird really because like I have plenty of red in my portfolio, but I'm trying to become what I hope will be a better investor. So even though I'm like up 20% on ATT, to me it still looks like a very clear buy. To me, this should be basically 300. So to buy at 266 actually still feels really good considering it's a long term hold. Also, as well, it did make me chuckle a little bit because when I was like looking into ATT and SMT before I sort of deposited these large amounts into them, I was like, let me just remind myself of their top 10 holdings, right? Let's see, if there's been any changes. And it's funny because between those two funds, as well as one where it's a semiconductor ETF, I now realize that I have about 2% of my portfolio in Nvidia specifically. That it really isn't deliberate at all. It's just the way that the funds themselves have been moving. My personal opinion is that Nvidia is quite expensive, but no one really knows, and it's very difficult as sort of people in general to imagine sort of exponential growth or anything like that. It may well be, another Cisco that's massively overhyped. It may well be the next Microsoft or Google or whoever, right? I personally don't know, and I really don't think too many people know. So having indirect exposure to Nvidia with all of this feels absolutely fine. I suppose if you were to take a bearish argument on Nvidia, you could say maybe that's part of the reason why these funds trade at a discount to their NAV. Net asset value. I think that would be a bit harsh. I think, unless you believe that Nvidia should be actually worthless, I think it would be hard to make that leap and impossible for SMT. The numbers just don't come close to adding up as that being the main reason. So I'm very happy, even though I'm sort of averaging up quite aggressively as a result of these buys for ATT. I'm more than happy to do so, basically, and I'm also considering making further moves specifically on my broad-based S&P 600, where I'm about flat at the moment and have previously trimmed already. Again, to buy ATT. I am considering sort of dripping that over a month or two if prices stay more or less where they are now, because I think that ETF is more or less up to date, whereas I don't think this one is. So that's my rationale and general thought process at the moment. If anyone feels vehemently either way, whether you think I'm a donkey or whether these are the right moves, I'd actually be really curious for your thoughts on the matter. I've also been buying ETF, my ETF here in REITs. So this is all in the same ISA, my wife's ISA specifically. So basically selling the healthcare and buying ATT and TRET. Now, this I'm down about 5% on this at the moment, give or take. I do get a quarterly dividend from it, which is very nice. But I think the REIT sector in general is just overly beaten up. I get the arguments against it, right? I know that interest rates are higher, the leverage is never helpful, etc., etc. I totally get that whole argument, but I just think it's overly beaten up effectively, and plus this particular ETF with exposure to REITs has a very heavy weighting in Prologis, which I think is again a value play. I don't think it's kept up to events at all, and so I'm actually normally I would be put off if I didn't really back the top holding because it's like 12%, and then the next biggest position is like 6. But I like what I'm seeing overall with this fund. And so I'm happy to average down very slightly, but it's actually a fairly large position in my portfolio overall now, so worth talking about. And then everything else here is either what we've already discussed or dividend reinvestment. So that's where the buys have been going. In terms of other moves, I mean, this is, I should probably tidy this up a little bit, but just as a reminder, I guess, or a walkthrough, this is my overall value according to my brokerage, what I have in my 3 accounts on Trading 212. This is then the amount I've deposited as a net deposit. This is what my Google Documents tells me. Now, of course, this figure and the Trading 212 figure should always match, and materially, as long as they're close, I'm pretty happy. There's tiny differences with like FX conversions and buy-sell spreads and that kind of stuff, but this is like, what's that, £51 out on 144,000, so that is an immaterial level in my opinion. My realised profit, I used to be a lot more active as a trader, less so now, but again, I think it's important to do realised and unrealised. Then my dividends and my profit and loss. So you can kind of see here that even though my portfolio value has gone up across that period, it has been higher, by the way. Actually, my profit's gone down, and again, that's because actually the existing portfolio has been going down. It's just I added that deposit, right, new capital, and that's really the reason. So like, I think when you first look at the thumbnail potentially for this video, you're like, how has that actually happened? Actually, it's quite simple. I deposited 9,000, my portfolio went down, you know, 5 give or take, and you can kind of see that most clearly in my profit here, which went from 9.5 to 5. So actually, you know, I'm rounding a little bit when I talk about it, but that is what it is, unfortunately. If we then just gloss through the rest of it, the portfolio value here, as I've touched on, has been higher. A nice little tick here, but that's all entirely capital added, right? This graph has been pretty wild this year so far, right? Bearing in mind, this is January, right? So it started fantastic, then it went down, then it was really good again. Now it's gone back down. I've had a nasty couple of months, to be honest. September, I actually outperformed the S&P very slightly, but the month before I didn't. And, you know, now I'm back underneath the FTSE 350, which I haven't been for a while, basically this year. Although even then it's a little bit debatable. But it's been a while, I think, since I've been under both of my benchmarks, so it's fairly unhelpful. I also thought that I'd be doing better than I am as the dollar strengthens against the pound, because I've been arguing for a long time that I think the pound was too strong. Basically, that seems to finally have corrected. But I think what's basically happened as part of that is because a lot of the FTSE 100 especially, which is the main weighting of the FTSE 350, a lot of their earnings are in non-GBP. So as that's got weaker, it's basically given it a boost to its earnings. So I think that's basically partly what we're seeing here, that, you know, I have less exposure, especially to some of those kind of more big and established FTSE 100 companies. You know, when my FTSE holdings are, broadly speaking, a lot more growth. You know, if I think of like Games Workshop or Kanos or Gamma, those are all kind of small companies compared to your like Leviathans in the FTSE 100. I do have a few of them, right? Legal and General Phoenix, they're pretty big in their own right. But most of my FTSE holdings are on the smaller growth side, so haven't really impacted from sort of multinational currency impacts and things like that. So that's been interesting and disappointing in a way, because I thought it would kind of put a bit of a floor on the reduction, but it hasn't really helped at all. And if anything, it's just kind of meant that the FTSE 350 has sort of re-established itself as a very stable, reliable performer, as you can kind of see here. And by the way, I mean, if the S&P keeps falling, it would absolutely, you could see a world where the FTSE would be on top again, like it was in the early stages of the war. So we will see how this shakes out. I think this is important to talk about. I go through stages where, like, sometimes I feel mentally absolutely fine, and it's like, oh, I'm building exposure to tech, I'm planning long term, it doesn't matter. And then other times I'm like, oh man, it feels dreadful, right? If only I'd have just put this into ETS to start with and everything else. And then I'm also like, oh, you know, I've got restricted trading for the last year because my wife now works in private equity. What if I'd been able to buy, you know, ASML there or Phoenix there? Like, would I be performing better? And like all these like doubts and stuff. But actually, like, mostly I return and feel relatively good. You know, I feel like I'm still doing okay and still profitable, still beating banks, which is one of the targets. Hopefully soon we'll return. But like, honestly, this is where I think it's really good to have lots of data, right? Like, there have been times where I've underperformed, times where I've overperformed, and there is a lot of volatility in all of these graphs, I would say. Like, I think it's something that, as new investors especially, and I've only been doing this now for almost 3 years, so I still feel relatively new, but like, you get into investing being told, you know, the market goes 7 to 10% a year, and sure, that might be true over a century, but you know, like if you actually break this down, the market's pinging around all over the place, right? Most of the time, it doesn't settle in that range. You know, be plus 40%, minus 20%, plus 60%. It's like all over the place. So it's just, I think like part of this is probably a kind of patience, keeping your head in it, and kind of reminding yourself that this is just a part of a longer journey. And actually, to be fair, I really enjoy watching the Compounding Investor. He has a very UK focused, but he's been doing it now for like 15 years, and now he's now starting to earn, you know, 4 figures a month, which I think is amazing. And it sort of just reminds you, it keeps you sort of honest to look at people who are maybe a little bit more along their journey than I am. And that's mostly where I've settled to at the moment. So we are feeling okay, but I won't pretend like it's not more mentally demanding than I was expecting beforehand. We're back to a situation actually where, like, whenever this happens, it's happened quite a few times really. What this means is when the bar looks like this, it means I'm still profitable, but only because of dividends. Like, actually, if you were to look at my growth, it's now sort of underneath this line, which means my growth specifically is negative. My dividends are obviously always going to be positive by themselves, but overall, it's still means I'm profitable, but only by about 4 grand. Considering, you know, I'd been like 19 up here, it doesn't quite look so good anymore. But again, we've been through this already quite a few times. Like, this is like the 7th time that it's been like a little rally and then a drop, and so again, like looking at this data actually makes me feel a little bit better, just because I'm like, oh, it's just round 7 across the last couple of years, right? It's gonna do this. We just have to keep focused. Um, Returning to this, then I mentioned already SMT. So my average SMT price is now 6.95. I want to say definitely under 7, so that feels really good. Um, yeah, I still like what I'm seeing. This ISA at the moment is maxed out, so I won't be buying for a while. Certainly nothing major, I don't think, unless a real opportunity opens up. But I'm now really happy with this holding. I will start to buy SMT anywhere near these kind of levels next financial year. For now, we're just going to enjoy this position and see what happens. Basically, I think I just like the general direction of travel. Gamma, after what I would describe as pretty solid earnings, has sort of drifted down with the wider stock market. I think Gamma is now a really strong looking buy. Several of my UK focused ETFs, especially this one, the Frogmorton Trust, have very relatively big weightings in Gamma. If you know you're not comfortable in the sector or the company, and you still want exposure to what I consider as a very high quality company with lots of tailwinds, then that could be an entry for you. But it does seem very underloved at the moment, as is most of the telco sector. But again, I think there's a lot that separates Gamma from the likes of, I don't know, Vodafone or BT, for example. Amcor we've already spoken about. Alliance we've already spoken about. So Genius has been pretty beaten up, and I did touch on this a few weeks ago, but broadly speaking, for the same reason as Amcor, one of its sort of early founders sold a huge stake at, I think it was 5.25, and just completely kneecapped the stock. And it was actually a bit of a shame, you know, like if I just zoom up to this graph again, this big spike here, which was like I was £100 from my all-time high. That was actually when Genius first published the last quarterly results, which I thought again were very solid, on track, etc. And it looked like I was about to go green on my Genius position, which would have been, you know, a 2-year bag hold finally coming good. And then it just, like, everything just sort of fell apart. Didn't happen at all. And we are back down in the doldrums of sort of a 30% red at the moment, which is a shame. But again, we are in this for the long run, so try not to let it get us down too much. I also mentioned here about this position in the small cap 600, so I think this buy price here is okay. I think it's basically up to events. I'm flat on it at the moment, and we are broadly happy with it. But kind of using it, yeah. If this went up to 80, you know, and ATT was still at this kind of level, I'd definitely look to sell a lot of this position and put it into ATT, just because I think it's such a safe bet. For, you know, 20-year time horizon, probably with a little bit in my treat as well, my global real estate ETF. The mining here, I have been buying very heavy previously, basically flat at the moment. I think I'm back down a couple of percent again, but again, more or less flat, just because I think it's a good long-term buy. But that's in my personal ISA where I've been buying SMT instead. By the way, guys, if it would be useful, I can always put which ISA this is in. I kind of know, but I appreciate that most people aren't going to know immediately where they sit. Phoenix here, I mean, has really fallen through. I can't believe Phoenix at the moment is 482. Like, if I was able to buy individual shares, I think Phoenix would be one of the ones that I would just be buying. It's like got a massively well-covered dividend, and it's currently yielding like 10%, more like 12%, I think, at current levels. To me, it looks like a very easy place to put your money. Enjoy a sort of, I mean, I'm looking for an 8% return long term, so that feels very comfortable. It's almost like a bond with hopefully will go up rather than down. I can't be certain in that, of course. It's never financial advice and all that good stuff. But to me, I'm really looking forward to buying under £5 when I get the dividends for this. It's just going to go straight back in. That's going to feel really good for the future. I also thought that Phoenix's results were really solid, were probably joint best alongside Aviva. Very different companies, of course, I get it, but in terms of like big insurers in the UK, I thought Phoenix, to use their own terminology, they've proven the wedge, right? They've moved themselves from a legacy closed life assurance policy specialist to a general wealth management company. Like more than half of their revenue and profit now comes from that sexier, high margin side rather than life assurance, where they're still the best, by the way. They still operate in scale and can eke out those very small margins in a sustainable way. But so that their business has gone up. I think it's quietly undergone a really significant change with things like the Swiss Re purchase and the Standard Life purchase, and etc. It's a fundamentally different business to what it was 3 years ago, even 5 years ago, especially before Swiss Re and Standard Life. So I think it's where they've been buying legacy, or not legacy, where they've been buying those companies, the incumbents did have large positions and they have gradually sold down a chunk of them. So that's maybe put a bit of a ceiling on the price. And the only disappointment for me really from Phoenix was no mention of a buyback or an acquisition. Like, I'm getting a bit impatient because they're sitting on an awful lot of cash. And I think the share price just justifies a buyback. If they can't find an acquisition, they had an acquisition last year for like $250 million. That's fine until you realize they've got like 1.5 billion cash and cash equivalents. So it's just like, okay, that's a good start. Let's buy another one of them, right? Or a couple. So it's just like I'd like to see them move a little bit faster or put the cash to better use. And honestly, I think at these kind of levels, a really good use is a buyback. I think it would. I think it was one of the things that sort of underpinned the more positive reactions to UK insurance reporting. Phoenix didn't have one. People were a bit sad about that, and that was my main gripe as well. I thought the business performance itself was actually really solid, verging on good. So that's worth saying. And I think I'll just round it out with a couple more things, two more things. I think first of all, Hollywood Bowl here. They publish very shortly. However, 10, which is one of their competitors, published really solid numbers. I think like the weather was favourable over summer, which is normally a bad period for bowling alleys. Hollywood Bowl is more expensive than 10, but it's considered. I think it's considered. It's certainly, in my opinion, a better business. I really like Hollywood Bowl. They did rise about 10% on the results from 10, the kind of read across. However, I still think this is really cheap. Again, another company I would definitely be buying, probably even more so than Phoenix. But Hollywood Bowl at the moment is just a kind of has a growth dividend policy that's attractive. Just a very well-run business, actually. It's a penny stock, so it's obviously risky, but it doesn't really look very risky looking at the numbers. Unless, a certain virus comes along again, it should be doing just absolutely fine. And Games Workshop as well, so they had unbelievably good numbers. 10th edition is really hot. I was actually watching their new animation series with the Necrons, one of the races in their universe. Really, I feel like they're finally nailing their animation. They've kind of, the previous stuff was kind of a bit derided for a company that's now a multi-billion-pound company. This stuff is really good, like genuinely watchable, beautifully done. I know there's a lot of hype for people who are like even Necron fans, Salamander fans, one of the sort of overlooked human chapters, Space Marine chapters. And speaking of Space Marine, there was like an extended gameplay of Space Marine 2, the new game everyone's hyped about. Again, looks fantastic. Is exactly what people want to be seeing in a Space Marine game. I think people are starting to feel increasingly comfortable with what a good Warhammer visual and experience looks like. And actually, I think a lot of people were a bit worried that as it kind of gained more mainstream appeal and acceptance, that people would start to tone it down a little bit, less blood or less gore, or, less... I mean, it's a pretty brutal universe, right? But that doesn't really seem to be happening, with maybe one or two exceptions, like the salamanders almost being human. So there's some lovely stuff going on there, and I really like the promise of what Games Workshop could be. It's had a bit of a pullback. I said I sold off like 65 shares at 115, give or take, because I felt like that was fully priced, and that was a 28 forward PE. Now this has gone down to, sort of like a 22, 23 would be again, just eyeballing it. that I think for a company of Games Workshop quality, you can definitely start to think maybe this is a buy at this kind of level. I probably wouldn't be jumping into it even if I was still buying individual shares. I still think this is a little bit cheap. I'd want it sort of 10% cheaper would be amazing. But this don't it doesn't feel like it's fully priced anymore. Like maybe there's a little bit of a gap between sort of this price and what I think is fully priced. Again, the margins here are better than Apple. It's got growth. It's got a huge dividend. It doesn't have dividend growth because they just give money whenever they feel like it, basically. So they don't care. They just get rid of money when they have it. Um, so it doesn't sort of tick in the same way that like a Gamma would or a Hollywood Bowl would, with very defined and predictable dividend commitments. But I still really like Games Workshop. I would still absolutely class it as a dividend and dividend growth just because it's yielding pretty solidly. And yeah, I think it's just so much quality basically, and it's its own moat, it's its own business, its own universe. It's kind of difficult for anybody to muscle in any meaningful way. So as long as they keep their fan base happy, where they've done a lot better job, I think this is going to just continue to do really well. So I just thought I should address that because it spiked with the earnings. I thought that was totally justified to 115. Now it's drifted back a little bit, and maybe you could think about buying. Again, I probably wouldn't be at 105 just because I think I'd rather be buying things like Hollywood Bowl or Phoenix. But Legal in General also looks pretty solid at the moment as a buy. What else can I see here? Kanos, I think, is actually really worth buying at the moment. It's pretty beaten up. UK tech company based in Northern Ireland. Redro, maybe, if you like your builders. But I think there's some other buys here that you would put before Games Workshop. But if you were looking for a high quality company and you're sort of, that's what you want to lock away money in a brilliant company, I think you could do a lot worse than Games Workshop at the moment, to be honest. So anyway, quite a big update today. That's mainly because a lot of stuff has changed and the market's been pretty wild in September. Let's just spend a quick sort of 10 to 15 minutes on the non-financial stuff and how that's going next. Alright, so in terms of contribution to wealth, honestly, pretty good month, although there's been a couple of interesting developments. So first of all, me and my wife both got a low four-figure tax bill. My wife's especially was much higher than she was expecting, so she's challenging that with her previous employer, who she thinks recorded a benefit in kind incorrectly. In fairness, they have said that they will resubmit it and that they have made a mistake, so hopefully that would reduce it quite substantially. But for now, we've basically made a provision as part of that technically offsets a little bit of this. That is also offset by a couple of pretty great sessions I had playing poker. I haven't played poker for a long time. At one stage, it was like a semi-professional income stream for me. However, I tried to previously sort of have a regular income target for poker, and I think like trying to hit a target just made me not enjoy poker so much. However, the last two sessions I had one where I won 2.7k, which is my second best performance ever, and one session just gone where I made 1.25k, which is like my sixth best session ever. These kind of wins are pretty rare. I mean, I've got over 100 sessions recorded now, so I mean, this is kind of right on the top end of what you would expect from a performance perspective. However, they feel really good. Right between them, that's the better part of £4,000. That will comfortably pay for a Easter holiday that we booked and have paid a deposit for this month. Not the rest yet, but that's kind of how I look at it. Basically, 2 nights have just paid for a 2-week holiday for my family and me, so that feels pretty great to have that. So we're still on target for our 70k per year. Beforehand, we were totally smashing it. We were up like 75k. Now it's more like 72. Just again, primarily as some of this thing takes a little while to wash through. However, still pretty comfortable that I'm going to hit that target. Next up, the total wealth here, which has kind of stabilized, I guess, for around 400k for 3 months now. It did have a couple of big jumps before then. But really, it's just where we have so much money exposed to the stock market and it's been going sort of sideways, it's just not been very helpful. As before, I still very much expect to miss my 500k target. However, I was talking to a few people in Discord, specifically ISA Investor UK, who has his own YouTube channel, by the way, and like, I think I want to revisit my projections, which I haven't changed since August 2020, when I was extremely new to all of this stuff and basically just trying my best to make projections. But I think since then I've kind of given more weight to the sort of exponential nature of compounding. And I don't just mean investments, although a lot of that is investments, but I also mean like careers and costs, right? I didn't quite appreciate maybe how expensive a very small child would be. some of my projections on income are also like too pessimistic, but I think basically what I've done is I've given myself too much linearity, if that's the right word, in my projections, where it should be more of a kind of like hockey stick, right, as kind of the snowballing effect kicks in. So I think some of my earlier targets are too ambitious, and this would be a good example of like I know it's 500 grand, that's still a lot of money, but it's only inverted commas 10% of the way to the goal. And I think it's like I've just been slightly too ambitious. I think maybe I was also quite confident because I did hit the 250k, but then it was like the markets were going really well, so maybe I was a little bit overconfident and etc. I'm not sure. There is of course an element of like artificialness in sort of changing targets after you've already done them, but right now this also feels somewhat artificial. So I did actually produce a graph that I put into Discord, but I'm not quite happy enough with it yet. I want to tweak it a little bit and then kind of like have that as a new target. Probably still getting to the same endpoint, right? Retiring in my mid 50s with 5 million still is the plan. But I think some of my bite-sized milestones are not quite where they should be. So I'm going to revisit that, but it is what it is at the end of the day. I still expect to hit that target next year. When exactly next year it will be, we will wait and see ultimately. In terms of the other stuff here, so implement new billing and payment systems. Honestly, it's going really well at the moment. I had a half-year review with my boss, and since then, also, I've seen really good improvements from both my project team and my IT teams. Uh, so, yeah, I actually gave some positive feedback to the CIO. Really enjoyed working with him and his guys over the last month or so. I feel like everything is moving in a really positive direction, and we're sort of getting ready to start migrating existing customers into the new systems, so that should be really good. I actually expect that to start sometime in October. It's going to have a relatively long tail as we kind of work through some relatively exotic sort of legacy scenarios. I think that's probably quite standard in migrations, to be honest. But again, I'm feel like the migration plan is in a good position, so feel very confident there. No change on my revenue assurance targets, but again, we've already hit them for this year, so that feels great. And to be honest with you, that's expected because I've redeployed the team to helping around the migration. PTC reduction is an interesting one, so propensity to call. That's been, I would say, reinvigorated, and I think that's partly because phase 3 is going so well, and there's a lot of sort of dependencies within the PTC improvements linked to other new systems. I mentioned new billing and payment systems, like that's my area. There are other systems across my business that are also being overhauled, revamped, etc. Basically, the entire back office of my company is being changed across a 2-year period. So yeah, although like these are the systems that I'm most interested in, there are a number of other systems that are also being updated that I don't personally deal with, but do feed into my area, including the PTC stuff here. So that feels good. Team organization. I mean, I mentioned previously I was a bit frustrated just because I feel like I have lost count of the number of versions of the budget I've done for the next couple of years. However, last Friday I did have a really good session with my boss. I even knew it was going to be a good session. I was very pleased with a PowerPoint I did. Don't really like PowerPoint very much, to be honest with you, but like I knew it was a good presentation. I sent it to him, a few hours before the meeting, and I was like, "Boom! It's not getting any better than this," kind of thing. Like I knew I was that confident it was a good piece of work, and yeah, he was like, "Yeah, that looks really good. Can you just check one or two things here and here?" And we'll go from there. So I think I'm almost there. I'm hoping to get everything signed off next week. Technically, this has to be agreed by November, but I do expect it to all sort of be wrapped up into everything else and spoken about basically at board level. Probably have some feedback and have to defend some things, but I think it's it's a good plan. I can't do any better. I mean, I got to the point where I was like, boss, if this is still a problem, like I just you're gonna have to find someone else, because like honestly, I don't really see how I can do this any better than this money here. And these kind of targets. And he was like, Liam, you're not going anywhere. So that made me feel pretty good, honestly. But it has sort of gotten to that point where I'm like really confident now, like, like guys, fire me because it's not going to get any better than this status. But again, I don't need to be that confrontational because I think it finally landed in the way I wanted it to do so. Also moving in the right direction is the end-to-end data reporting. This hasn't been a priority for a number of months with everything else going on, but it has now started to rise up again. And to the point that the team I'm going to be working with here has got the person, literally, I met him last week. And, so now we're going to sort of start working toward the plan and coming up with a plan ultimately. To improve the sort of end-to-end data. Again, this is also incumbent on new systems, new everything that are, the databases are sort of taking stuff from and feeding stuff into. So it's kind of, has contingencies elsewhere as well. So work, I think, is going pretty well. Fitness and well-being is a bit mixed, I would say. Over the last couple of weeks, I've done 2 workouts. Again, I do want to be doing 2 a week, but my wife's been quite unwell. She's got like some kind of cold. At one stage, I thought it was COVID. She took like a proper test, but it wasn't. But it is sort of has that feel to it. Um, so that's been unhelpful, and I've been doing a lot more nursery runs than I would normally do. But at the same time, it's my wife's also been working super hard at work. She's sort of been going through a bit of a restructure, so I'm just about able to help. But I'm also kind of pretty tired. But at least being appreciated is a nice thing. No change in my weight there. Taking care of myself is a bit of a mixed bag as well. So my sleep got much worse. To be honest with you, it wasn't really helped by poker. Like, I like to play during the night time. I think I've got the strongest edge at night time. But it does mean that it kind of knocks me out for the next day. I'm not such a young man anymore. I can just like power through, right? I've got like parental commitments as well. So it does tend to wreck me for a couple of days. So that's been disappointing, I guess. Everything else, however, has been really good. I've been sort of, making sure I'm taking care of myself, like grooming, like, I know it sounds silly. I shouldn't really need to like have a process or stuff to do things like, making sure I brush my teeth twice a day, or just have like some sort of skincare routine. But I guess I do, because it's one of those things that's so easy to just not prioritize. But again, I'm not like in my 20s anymore, and I can just rely on metabolism to get me through. So it's just sort of, again, I just an effort to start taking care of myself. So everything else except from sleep has actually got better, but sleep got a lot worse. So in my younger days, I would class myself as I was a hardcore insomniac. I would regularly skip sleep like 2 to 4 hours a night, and actually be somewhat highly functioning. But now that I just can't manage at those kind of levels any longer, so I need to keep on top of it. Outside of that, relationships. So I mentioned a couple of weeks ago, I would still say there are some challenges remaining as me, my wife, and my daughter all get used to her new school. She does officially still go to nursery, but the nursery is now part of the school she'll be attending, and they just have very different expectations. The day is very different, etc. So we're all just still getting used to those challenges. I would say last week especially was significantly better. Me and my wife, and again, especially considering my wife was still recovering from a bit of an illness, I think we all did a pretty good job, and even my daughter as well. Got like a poorly tummy, so that was unhelpful as well. But like, the routine now is getting there. My daughter's circadian rhythm has adjusted to sort of be waking up a little bit early without being proper grumpy in the morning, and things like that. So still 1 or 2 challenges, but definitely much improved. Last week especially, so I'm hoping. Me and my wife have basically we wrote off September. We were like, you know what, we ate poorly, we were tired, we were a bit grumpy with each other, right? Everyone just had no patience, and it was pretty tough with work as well. Lots going on for my wife and I. So we're like, right, let's start anew in October. We're moving in the right direction, which is the positive thing. Let's see how we can make October work. My wife did actually put out a couple of feelers to see if we could get like basically like what's called an after-school nanny. There's actually a niche nanny service within London, which made me chuckle. So we're basically going through a bit of a recruitment and screening process there at the moment. We're not 100% sure if we'll need such a service, but we kind of wanted to see what was there, whether it would benefit us, what the kind of commitments would be, and how it all works, etc. So there might be an update on that in the near future. We will see. For now, though, I think like we could manage like this, at least for the medium term, if it continues to be as good as it was last week rather than earlier September. I visited my sisters and aunties, actually. We did a bit of a visit to my aunties as well at the same time. It was just a single day, so it was very early start and late finish. But my daughter slept for like the whole evening, like from the train through to the morning, so that felt pretty good actually, because I was also pretty spent, so I'm glad. Honestly, I was glad she fell asleep on the train. That made my evening so much easier. Then I've had a couple more catch-ups, mostly from LinkedIn. I did meet somebody. I do have somebody I'm meeting with next week, and I also met a recruiter as well, so that just to sort of catch up and etc. I also had a chat with sort of I don't know, let's call it a networking kind of professional service. So we'll see whether that goes anywhere. I also had a couple of chats with what I would class as industry consultations. I used to do these quite a lot at one stage, and they tend to come in like waves, and I really enjoy them because they pay so well. It's like 150 to 250 quid an hour for consults, and I've had a couple recently. I'm not sure if it will create a kind of, they'll come in mass, just because they're quite different. The ideal situation is when the industry changes, or there's some kind of new technology or new strategy or something, And so the last time I had it was when the like telecom regulations in the UK changed in 2018. I had so many, it was awesome. Since then, I do still have like one every 3 to 4 months or so, and it can be on a number of things. So I had one in early September about basically the mobile market in the UK. And then I've just had one last week that was actually a comparison of financial systems, which was something I have not done before. But I was in a fairly unique position where I'd worked with both systems and likewise as well actually tendered on both systems. So that was a bit different. So we'll see if any of them lead to anything else. It might just be a one-off, but they were like 200 quid each. So that's very nice when that money's going to land sort of shortly. Outside of that, regular YouTube videos, I would still say is a bit sporadic. Again, I keep like trying to do better, but just I do tend to put YouTube down as my like nice to have kind of priorities. I mean, I'm doing this on a Sunday night. However, I do still want to do it. Also, I would say it was quite nice. I think my London costs video was quite well received. Lots of comments and quite strong viewing numbers already, and actually sort of partly as a result of that, and like my wife and me talking about like whether we could afford a nanny. I'm in the process at the moment of doing like a very detailed cash flow forecast, so I suspect that will be of interest to YouTube, and probably in a couple of weeks as we start to have sort of very detailed data coming in for October. I'll maybe share that. It'll give, I think, an unprecedented view. I'm not really sure of too many YouTubers who go into the level of detail that potentially I could do from that. But I think, in fairness, it was still a nice little video to do about costs for London. So if you've not watched that yet, feel free to. Studying Polish is broadly unchanged, I would say. I do sometimes talk, little sentences with my wife and daughter, but they still lack structure. And to be honest with you, I kind of want to do something about it. Publishing a story. So again, I've got now a couple of drafts and a couple of ideas. I'm basically there, and I have a plan. I'm actually going to start talking to one or two people about basically illustrations. So I kind of was hoping this was going to be a week further ahead, so I could update you guys now. But probably by mid-October here, I should have a more solid update, and at least more details of a plan. Let's put it that way. And then regular reading. So I finished a really interesting book on capitalism a couple of weeks ago and haven't yet got around to buying a new book. So I need to get around to that. But honestly, yeah, September was so tiring. I didn't really have any will to do it. Interestingly, I did get a Scottish Mortgage Investment Trust sent me their 6 monthly magazine. So that's currently sitting by my toilet. And I will eventually get around to reading that as well. So that should be something for me to read in the meantime, at least. Anyway, this video I think has been long enough. Thank you very much if anyone's stuck with this until the end. Any questions, comments, standard stuff down below. But otherwise, thank you very much, everyone, and good luck with everything. Bye for now.